let's take a look at the panel discussion. And I hope all the panelists are in already, because we want to take a look at... Yes, everyone is there. I can see you. I want to welcome Maren from Brightpoint. I want to welcome Michael from Futury Capital and Till from High, who are more than happy to discuss with me today about the topic of sustainable investing. And maybe I want to get an opinion from all of you first before we deep dive. Starting with Maren, what's your opinion on it? Why is sustainable investing more urgent than ever? We've heard it in the summit before, some opinions on this, but I want to hear it from you. What's your opinion on it? Why is it so important right now?
Yeah, it's so for me, especially as a founder, it's so important because at all and foremost, of course, as a founder, I share the responsibility to guide our company acting in a most responsible and most conscious way in the society that an environment that we are working and living in all together. And from, let's say, from the view of a company, of a CEO, it's so important because there's one main reason that, for instance, drives me, besides the ecological aspect, that is the war for talents. Employees that join now have a complete different mindset. They have complete different values, expectations than 5 to 10 years ago. And young talents that join our firms, for instance, at the moment are more positive, idealistic. They are looking for a purpose in their job. So being sustainable as a company is, for me, a good chance to win the war for talents. And secondly, ESG risk is a capital risk or an investment risk. So if I don't consider inherent ESG risk in my daily doing in a company, I lose access to the capital markets. So that's why it's so important.
Thank you very much. You mentioned already this topic of war for talents on the one hand, and briefly discussed on this risk factor. So maybe handing over to Michael, you as an investment firm, what's your take on this? Why is this topic so important for you?
I believe so. As good morning. Thank you for having me here. For me, I think there's no alternative. We have to focus on sustainable investment. From a global perspective, we are facing a situation where we have a population growth worldwide. This has an enormous effect on the use of resources, food, energy, water, healthcare, education. So there's no way around to look at sustainability. From the investment perspective, what I see is that a huge market basically has evolved over the last decades. I have read a study recently that since 2012, I think every year the market doubled in the ESG investment space. So if you want to participate in a growth market, you have to be there. And thirdly, I think that's from investor perspective most important is that the habits have changed or are in the process of changing. The younger generation, millennials, but the younger generation would like to invest according to their values. We know that at each generation, between 70 and 80% of the wealth and the funds are reallocated. This means then, in the end, if you do not want to be out of the business, you have to listen to your investors, and they are clearly ESG driven.
Thank you very much, Michael. You also mentioned the younger generation. I'm looking now to Till, maybe from a consulting perspective, but also you as a, let's say, new generation. I also maybe consider still myself to this. What's your take on this?
Thanks, Jannis, and good morning. I think the increasing urgency, I think it's clearly due to the accelerated climate change. And the carbon budget for the 1.5 scenario at current emission levels will be used up in around 7 years. So the carbon clock is really ticking fast. And I think there's an increasing consciousness among investors about the effects of their capital allocation. And then the corporates, our clients, they are feeling that pressure from consumers, from regulators, and from the capital markets. But they're also seeing the opportunity arising out of it. So this is why we are very much focused, on identifying new sustainable business models, and that's also the way I like to think about it.
Thanks a lot. And now maybe looking a little bit, we talked about sustainable, or we used the word sustainable investments now quite a lot. And I want to have like this little maybe educational session here for someone to take also something away who doesn't know so much about this topic. Michael, what do you think? Like, can you explain us a little bit the difference of the traditional investment style maybe and this trend of sustainable investing, so we all take this away today?
Yes, well, I would say that traditionally we always looked at two things. First is risk, second is return. So this is all about to look what will I get out of my investment, risk and return. Looking back past decades, I think the sustainable investment movement somehow started in the 80s, 90s. Real momentum we got in the past 5 to 10 years. What has changed there? As Maren already told us, so looking at risk is always important. And with a sustainability focus, we started under certain risk focus. So what we did, we excluded certain companies, certain sectors which we thought that would be risky, such as tobacco manufacturing or weapons manufacturing or gambling. So this is one side of the ESG, but in the past 5 to 10 years, things has changed. We are looking much more at a perspective from opportunities. So what investors now doing or are convinced, they see that there will be a great number of business models and companies and investment opportunities which clearly will profit from this movement towards a more sustainable world. And this has been changed, I think, the mindset of the investors.
Thanks a lot. And maybe taking the next step then, there are a lot of terminologies out there with regards to sustainable investing. Asking till now, for example, if we look at ESG investing, what's a term, for example, or impact investing is also another term. Can you maybe give us some infos? What's the difference?
Yeah, sure. I think it's a great question because it's very important to differentiate. So I think you can think of ESG factors as risk factors, as Michael already put it. So they indicate the exposure to very industry-specific, environmental, social, or governance risks. So it's more like a downside protection. But it doesn't actually tell you if the company is contributing to, climate change mitigation or to the sustainable development goals. Whereas an impact investor would typically look for positive environmental and social returns alongside his financial returns. So it's much more positive way of thinking about sustainability.
And Maren, now deep diving a little bit further, you are with Brightpoint also a company helping investors, especially funds, as I understand it, to report on this. I mean, the one hand is to actually invest sustainably, and the other hand is how do I report this? And maybe there are different drivers for organizations to do this and to facilitate this reporting of sustainable investment. What do you see currently? Do you expect hard frameworks in the future and hard regulation from the government side on this? And what's your take on this?
Yeah. Yes. Actually, absolutely. I expect that. So in the past years, we have seen, let's say, good intentions from fund managers, but often it was not so much more than exactly that. Good intentions, non-binding, and people only move under pressure. So that's why we now see regulators, but not only regulators, also the institutional investors alike driving the adoption towards the Article 8 funds and the Article 9 funds, with, let's say, very high-level Article 8s being what Michael said, more focusing on.
Can you quickly explain that? Article 8, Article 9 funds, what's that?
Yeah, there's a Disclosure Act, and there are more articles. There's an Article 6 fund, so to say, but Article 8 funds are those funds that, let's say, take into consideration ESG criteria in their documentations, in their marketing documentations, but more towards what Michael said, more towards the risk assessments of the investments. Whereas Article 9 funds, so we often say Article 8 funds are more light green funds. At the moment, whereas Article 9 funds have a much higher burden. These are really impact funds that so-called also the dark green funds, if you say so, where you're really forced to report and to disclose on hard facts, for instance, such as a gender pay gap, but also, of course, carbon emission footprints, etc. So very, very hard. So it's let's say a high risk also for fund managers at the moment to fulfill those reporting requirements of Article 9. That's why we see a lot of funds actually adapting to Article 8 at the moment, and very few at the moment to this hard dark green Article 9 funds Disclosure Act. Yeah. But that's what we also see is that there's a certain or uncertainty still in the market, and different interpretations of the definitions from the Act. So I really expect the regulators, for one. I expect the institutional government funds like KfW Capital or EEF and also the industry associations like in Germany BVK or Invest Europe for the European market to come up with a industry standard, more tight industry standard reporting.
All right, Michael, you're one of the investment managers Maren talked about, and you at Futury Capital, for example. What's your take on this? What's the focus of Futury Capital also from a strategic investing point of view? Is it really a strategic factor, the sustainable investing? Where do you see yourself, or is it more like a hygiene factor to you?
Well, Futury Capital is an investment company which is currently managing two venture capital funds. One is a very early stage venture capital funds. That means that we are investing in really young companies, somehow between 0 and 3 to 5 years of its existence. Then we have a growth capital fund which invests in companies afterwards, for instance, helping them to internationalize on a global scale. When we invest, we look at the team, we look at the market, and we look at the product. We want to invest in great teams with a leadership, with a clear vision in high growth markets, with a very clear focus on a product or solution which marks the difference. And here comes in again the sustainability. We look for these, or we're searching for these products and solutions. So we are clearly on the road there, but as a venture capital fund, we were established 3 years ago, so we didn't file for this Article 8 or 9. So we do not have this, let's say, legal obligation. But of course, under the risk and opportunity perspective, we are looking at sustainable targets.
So you're saying a lot is changing there for you also in this process. How is that looking for you? I mean, I find this interesting. Can you give us 1 or 2 insights on how this change looks for you, just very practically in your day-to-day work?
Yeah, so these changes are twofold. First of all, in this year, 2021, we invested in 2 startups which have a clear ESG exposure. One is a software company with a software documenting the value chain and the impact of suppliers of a product which they have. That's the company C-Trace. The second company is the company Resider, which is clearly known as a member of the mission, of one of the first missions here. And they are having a software where you, as an B2B customer, can see what sort of your packaging of your product is you can recycle in each country. So there's a clear focus on ESG. What we also see is that within our portfolio companies, the strategy is being aligned towards more ESG. One example is our portfolio company Twarit, based in Frankfurt. What they are doing is also software for analyzing and predicting manufacturing processes in the metal manufacturing industry. When they did so, the key challenge what came up over the past 12 to 18 months is the request of the companies towards a zero waste manufacturing. So they are have aligned their strategy, and they say, it is possible for metal manufacturer to have a zero waste manufacturing, and with our software tool, we can accompany you towards this goal. So this is a clear change what we see in our practical work.
Thanks a lot. And now maybe looking at, with, for example, Resider, you mentioned a company being focused on this waste aspect, for example. But on the other hand, there is, I think, also a big trend within this climate tech area in the venture capital market, right? And Till, maybe, how do you see this? Is that... how can this basically help impact the climate transition if the venture capital market focuses on something like this?
Yeah, I think venture capital can be a key accelerator for the climate transition, and it definitely is already sometimes today. For new clean technologies or for digital business models in the very early stages. Many of these clean technologies are very R&D intensive, so there's sometimes a little bit unattractive for the average fund life cycle of VCs, but we see that more funds are committing to investing into climate tech. So I definitely think that they will play an essential role in, bringing the market and technologies we need to a larger scale.
Maren, now asking you on a broader scale, this topic of sustainable investing, what do you think, what impact will that in general have on the entire startup ecosystem that has been flourishing more and more also in Germany and Europe over the time? Will it change it fundamentally? What's your take on this?
Well, it will boost more impact startup, which is great. So there's a lot of capital for ESG and impact investment in the market at the moment. So responsible investment is mainstream, became even more traction and gained more momentum within the last 2 years of COVID. Michael already mentioned the growth rates of ESG investments being, what did you say, 50%? I would say more than 20% year over year for the last year, steadily growing. Yesterday I looked at Deal Room. Deal Room states now 70 European venture capital funds with an ESG impact or impact investment strategy focus. So Germany just yesterday or this week, Speed Invest, for instance, launched 80 million on climate tech fund. World Fund has been announced this year with 350 million. So there's really a lot of capital out in the market at the moment, and access to for impact startups to capital is good. The companies now, the startups now, but need to have their ESG data set and they have a good financial modeling on hand to go to positive due diligence.
Thanks a lot. I would have a lot of many more questions to you, but we have to continue. One last thing, though, I want a wish from each of you, if towards startups, towards the sector, towards investors. It doesn't really matter. What would be your wish? Maybe starting, with you, Maren, again, for the industry there.
My wish for the industry, my wish is really that we see more startups in this area, in this space evolving. So I just recently read the post that Larry Fink, the BlackRock CEO, said he's expecting what she said, the next 1,000 unicorns being from climate tech. I think this is a really, really promising statement for all the teams out there that are evaluating new models and starting an impact business today. So, go for it.
Great shout out or call for action, sorry. Michael, what's your take?
I think we should start with ourselves. First of all, what we tell young startup companies and what we are also in the process is establishing an own ESG strategy for ourselves. So for our company and for the startups, knowing that they are small companies, not imposing too much, but at least to ask them, what is your strategy and what is your certain impact in certain categories. Second, these categories have to be measured, and there is the real issue. And I think Deutsche Bank has already mentioned that in the previous stream. We need a clear standardization of this measurement, of these frameworks, of these metrics, and I'm optimistic. There are a number of initiatives underway which have the clear goal to have some sort of standardization, because that's the only thing what then investors have to compare one investment with the other. So start with ourselves and standardize the framework. This is my wish.
Thanks. And Till, last but not least.
I agree with Michael. I think we need more transparency from corporates on sustainability engagement, and maybe looking at founders. I think you have to be bold, and we need to make huge steps to get to net zero. So if you're a founder, then just be very bold, and I think that's what we need.
Great, and maybe I even have a wish as well. I think there are a lot of, we talked about a lot of measures, a lot of things that need to change still, or that still need to change basically to make this impactful. I would hope that all these measures at the end really lead to the fact that money is allocated at the right place where it has the most impact. And hopefully even this will be with one of our startup teams today.